Why is interest forbidden in Islam? Assalamu alaikum wa rahmatullahi wa barakatuh. Peace, mercy, and blessings of Allah be upon you. In Islam, halal and haram are fundamental concepts that define what is permissible and forbidden according to Islamic teachings. Halal. This term means permissible or lawful. It refers to actions, behaviors, foods, and financial transactions that align with Islamic principles. For example, halal food follows specific guidelines, including the ethical slaughter of animals, avoiding intoxicants, and adhering to dietary laws prescribed in the Quran and Sunnah. Halal also applies to ethical business practices, lawful earnings, and moral conduct. Haram. This term means forbidden or prohibited. Anything considered haram is strictly discouraged in Islam and carries spiritual consequences. Common examples include consuming alcohol, eating pork, engaging in unethical financial dealings, such as interest-based transactions, known as riba, and committing immoral acts. Haram also extends beyond food. Actions like dishonesty, injustice, and oppression fall under this category. The classification of halal and haram is derived from Quranic verses, Hadith, sayings of Prophet Muhammad, and Islamic jurisprudence, fiqh. Some matters are explicitly halal or haram, while others may fall into makruh, discouraged but not sinful, or mubah, neutral/permissible, categories. Introduction to riba or interest in Islamic thought. The Islamic prohibition of interest, riba, represents one of the most distinctive economic principles in Islamic jurisprudence. This foundational teaching isn't merely a religious preference but a comprehensive ethical framework that shapes Muslim economic behavior worldwide. Riba literally means increase or growth in Arabic, but in Islamic jurisprudence, it refers specifically to the unjustified increase in capital without any real economic activity or assumption of risk. The prohibition extends beyond simple interest to encompass any predetermined return on a loan or debt, regardless of the rate charged. This series will explore the profound theological, ethical, historical, and economic dimensions of this prohibition, examining both classical and contemporary perspectives on why over 1.8 billion Muslims worldwide are instructed to avoid interest-based transactions. Quranic foundation, the primary textual evidence. The Quran, Islam's primary source of guidance, contains several explicit prohibitions of riba that form the foundation of Islamic economic ethics. The most comprehensive verses appear in Surah Al-Baqarah, Surah 2 Ayah 275-280, stating unequivocally, Allah has permitted trade and has forbidden riba. This verse establishes a clear distinction between legitimate trade and interest-based transactions. The severity of this prohibition is emphasized in Surah Al-Baqarah, Surah 2 Ayah 279. If you do not give up riba, then be warned of war from Allah and His Messenger. This represents one of the strongest warnings in the Quran against any practice. In Surah Al-Imran, Surah 3 Ayah 130, believers are warned, O you who have believed, do not consume usury, doubled and multiplied, but fear Allah that you may be successful. This verse specifically addresses the compounding nature of interest. Surah Ar-Rum, Surah 30 Ayah 39, states, and whatever riba you give so that it increases in the wealth of people, it will not increase with Allah. This contrasts interest with charity, highlighting that while interest may seem to increase wealth materially, it lacks spiritual value. These verses collectively establish that the prohibition of riba is not simply discouraged but stands as a major sin with serious spiritual and social consequences. Prophetic teachings and early Islamic understanding. The Prophet Muhammad's teachings, Hadith, forcefully reinforce the Quranic prohibition of riba, emphasizing its severity. In a narration in Sahih Muslim, the Prophet cursed 4 categories of people involved in interest transactions: the one who consumes riba, the one who gives it, the one who records it, and the witnesses to it. This comprehensive condemnation extends responsibility to all participants in interest-based transactions. The Prophet classified riba among the 7 destructive sins, Sahih Bukhari, placing it alongside polytheism, murder, and other major transgressions. In another powerful narration recorded by Ibn Majah, the Prophet stated, riba has 70 segments, the least serious being equivalent to a man committing adultery with his mother. This vivid comparison underscores the gravity with which Islamic tradition views interest. During his farewell pilgrimage, the Prophet announced, "All riba of the pre-Islamic period is abolished, and the first riba I abolish is that of my uncle, Abbas ibn Abd al-Muttalib." This declaration demonstrated that the prohibition applied universally, even to the Prophet's own family. These teachings established a comprehensive framework that shaped Islamic economic thought through the subsequent centuries, showing that riba wasn't merely a theoretical concern but a practical issue requiring immediate social reform. Historical context: pre-Islamic Arabia and early Muslim society. To fully understand the prohibition of riba, we must examine the historical context in which it emerged. In pre-Islamic Arabia, Jahiliyyah period, exploitative lending practices were rampant. A common practice involved doubling and redoubling debts when borrowers couldn't repay on time, creating cycles of perpetual indebtedness and even leading to enslavement. When a borrower couldn't repay a loan, creditors would say, "Either you pay in full, or I increase the amount and extend the term." This practice, known as Riba al-Jahiliyyah, pre-Islamic usury, created crushing debt burdens. The Quran's prohibition of riba came as part of a broader social reform movement that sought to establish economic justice in Arabian society. This reform was revolutionary in a mercantile society where wealth accumulation often came at the expense of the vulnerable. The early Muslim community established the first interest-free economy of significant scale, demonstrating the practical possibility of operating financial systems without riba. The establishment of Bayt al-Mal, public treasury, provided interest-free loans and welfare support. This historical context reveals that the prohibition of riba wasn't merely theological but was a practical response to real social injustices that had devastated communities. Theological rationale: why God forbids riba, interest. The prohibition of riba, interest, in Islam stems from profound theological principles about human relationships and divine justice, divine sovereignty. In Islamic theology, all wealth ultimately belongs to God, and humans are merely trustees. Interest represents an attempt to guarantee returns without divine involvement, contradicting the principle of reliance on God's will. Human dignity. Islam recognizes fundamental human dignity, karamah, that must not be compromised through economic exploitation. Charging interest on those in need violates this dignity. Brotherhood and solidarity. The Quran frequently emphasizes that believers are brothers, Surah Al-Hujurat 49 ayah 10. Interest creates adversarial relationships where profit comes at another's expense, contradicting this brotherhood. Balance, mizan. The Quran describes creation as existing in perfect balance. Interest disturbs economic balance by allocating resources based on existing wealth rather than productive capacity or genuine need. Purification of wealth. Islamic teachings emphasize that wealth must be purified through charitable giving, zakat, not increased through interest that may exploit others' difficulties. This theological framework reveals that the prohibition isn't arbitrary but reflects a coherent divine vision for human economic relationships rooted in justice, compassion, and divine dependence. Types of riba, interest, in Islamic jurisprudence. Islamic scholars have developed nuanced classifications of prohibited interest transactions. Riba al-Naziyah, interest on loans. This refers to the predetermined excess paid by a borrower to a lender in return for time given for repayment. This is the most commonly understood form of riba, covering conventional loans with fixed interest rates. Riba al-Fadl, excess in exchange. This more subtle form involves exchanging similar commodities of unequal quantities. The Prophet specifically mentioned 6 commodities: gold, silver, wheat, barley, dates, and salt, that must be exchanged in equal measure and hand-to-hand to avoid riba. Riba al-Jahiliyyah, pre-Islamic usury. This refers to doubling a debt when a borrower cannot repay on time, creating compounding interest, a practice specifically condemned in Surah Al-Imran 3 ayah 130. Riba al-Qard, loan interest. Any benefit stipulated by the lender as a condition for providing a loan constitutes this form of riba, even non-monetary benefits. Scholars continue to apply these classifications to modern financial instruments and practices, demonstrating the dynamic nature of Islamic jurisprudence in addressing emerging economic questions while maintaining core principles. Economic rationale, interest and systemic instability. Beyond theological concerns, Islamic economists point to several economic rationales behind the prohibition of riba, interest decoupling finance from real assets. Interest-based systems allow money to generate more money without necessarily creating real economic value, leading to financial bubbles disconnected from productive activity. Misallocation of resources. In interest-based systems, capital flows to those who can pay the highest interest rates rather than those with the most productive investment opportunities, potentially starving innovative but higher-risk ventures. Economic instability. Interest-based debt creates systemic vulnerabilities through leverage and compound interest, which can amplify economic downturns. The 2008 global financial crisis, triggered by excessive leverage in mortgage markets, exemplifies these dangers. Consumption smoothing without debt traps. While conventional economics uses interest-bearing loans for consumption smoothing, Islamic finance achieves this through equity-based instruments that avoid debt traps during economic downturns. The work of economists like Muhammad Najatullah Siddiqui and M. Umair Chepra has demonstrated that interest-free economics is not merely a religious ideal but offers practical insights for creating more stable financial systems. Social justice perspective, protecting the vulnerable. The prohibition of riba plays a crucial role in Islamic social justice frameworks, protection of the vulnerable. Interest disproportionately harms those already in financial difficulty, as they face the heaviest burden of interest payments. The Quran repeatedly emphasizes protection of the vulnerable as a core value. Prevention of wealth concentration. Interest naturally concentrates wealth in the hands of those who already possess capital, exacerbating inequality. Islamic economics aims to circulate wealth throughout society, as stated in Surah Al-Hashr 59 ayah 7. Promoting real economic activity. By prohibiting guaranteed returns on capital, Islamic economics encourages direct investment in productive enterprises that create jobs and tangible goods and services. Encouraging socially beneficial lending. The prohibition of interest, coupled with encouragement of charity, sadaqah, and interest-free loans, Qard Hasan, creates a culture where lending becomes an act of social solidarity rather than profit-seeking. This social justice dimension becomes particularly relevant in developing economies where interest-based microfinance has sometimes led to overindebtedness among vulnerable populations. The ethical dimension, beyond rules to moral development. The prohibition of riba serves deeper ethical functions in personal and community development, spiritual growth. Islam views the avoidance of riba as part of a broader spiritual journey toward detachment from material fixation. The Quran contrasts interest with charity, stating, Allah destroys riba and gives increase for charities, Surah 2 ayah 276. Cultivating empathy. By prohibiting profit from others' financial distress, Islamic economics nurtures empathy for those in need rather than seeing their vulnerability as a business opportunity. Building trust and social cohesion. Interest-free transactions based on profit sharing require greater transparency and collaboration, fostering community trust. Character development. The Quran repeatedly links economic behavior with moral character, akhlaq. Avoiding riba develops patience, generosity, and concern for collective welfare rather than maximizing personal gain. This ethical dimension explains why riba prohibition is not seen merely as a technical ruling but as integral to the development of a righteous society and individual moral character. Islamic financial alternatives, practical solutions. Islam doesn't merely prohibit interest but provides comprehensive alternatives for financing, profit and loss sharing, mudaraba/musharaka. These partnership arrangements distribute both profits and losses between capital providers and entrepreneurs according to pre-agreed ratios, ensuring shared risk. Cost-plus financing, murabaha. The financier purchases an asset and sells it to the client at a marked-up price with deferred payment. Unlike interest, the markup is fixed, transparent, and tied to a real asset. Leasing, ijara. Similar to conventional leasing, this allows customers to use assets without purchasing them outright, with the option to eventually own the asset, ijara wa iktana. Interest-free loans, Qard Hasan. Charitable loans where only the principal is repaid, encouraged for helping those in need. The Quran promises divine rewards for such loans. Who is it that would loan Allah a goodly loan so he may multiply it for him? Surah Al-Hadid 57 Ayah 11. These alternatives demonstrate that avoiding interest doesn't mean abandoning finance, rather, it transforms the nature of financial relationships from debt-based to partnership-based arrangements. Historical perspectives, interest in world religions and civilizations. The Islamic prohibition of interest isn't historically unique but resonates with other religious and philosophical traditions. Judaic tradition. The Torah explicitly prohibits interest among Jews. Do not charge your brother interest, whether on money or food or anything else that may earn interest. Deuteronomy 23 verse 19. Christian history. For much of Christian history, usury was condemned. Thomas Aquinas argued that to take usury for money lent is unjust in itself, because this is to sell what does not exist. Greek philosophy. Aristotle considered interest unnatural, stating that money was intended to be used in exchange, but not to increase at interest, a view that influenced Western philosophy for centuries. Medieval Europe. The Catholic Church enforced strict usury prohibitions until the 16th century, while Jewish communities often became moneylenders because they could charge interest to non-Jews. This historical perspective demonstrates that concerns about interest aren't uniquely Islamic but reflect a widespread historical understanding of economic ethics across diverse civilizations. Modern applications and challenges, interest in contemporary life. Muslims today face various challenges in applying riba, interest. Prohibitions in modern economic systems, banking and financial services. Muslims must navigate conventional banking systems while seeking Sharia-compliant alternatives. Islamic banking has developed to meet this need, growing into a $2.7 trillion industry globally. Mortgages and home ownership. Housing presents particular challenges, with Islamic mortgages using structures like diminishing partnership, musharaka mutanakasa, where the bank and client co-own the property. Student loans and education financing. With education costs rising, Muslims are developing alternatives like income share agreements that finance education without interest. International trade and finance. Muslim-majority countries engage with global financial systems that operate on interest, creating practical and ethical dilemmas for governments and businesses. These contemporary challenges have driven innovation in Islamic finance, demonstrating how religious principles adapt to modern economic realities while maintaining core ethical commitments. Common misconceptions and clarifications. Several misconceptions about Islamic interest prohibition require clarification. Misconception: Islamic finance just disguises interest with different terminology. Clarification. Authentic Islamic financial instruments differ fundamentally from interest by linking returns to real assets and sharing risk. Mere interest relabeling, Halal, is condemned by scholars. Misconception: the prohibition only applies to exploitative interest rates. Clarification. Islamic scholarship considers all predetermined returns on loans as riba, regardless of the rate. The focus is on the nature of the transaction, not just the percentage charged. Misconception: inflation adjustments are prohibited. Clarification. Many scholars permit indexing loans to inflation as this maintains the real value of money rather than generating additional profit. Misconception: Islamic finance prohibits all forms of profit. Clarification. Islam enthusiastically encourages legitimate profit through trade and investment. The Quran states Allah has permitted trade in the same verse prohibiting riba, interest, Surah 2 Ayah 275. Addressing these misconceptions helps both Muslims and non-Muslims understand the nuanced ethical framework behind riba, interest, prohibition rather than viewing it as simplistic or arbitrary. Global impact: the rise of Islamic finance. The prohibition of riba has spawned an entire financial sector with global influence, market growth. Islamic finance assets exceeded $2.7 trillion in 2021 and are projected to reach $3.69 trillion by 2024, according to the Islamic Financial Services Board. Geographic expansion. While concentrated in Muslim-majority countries, Islamic banking has expanded globally, with major conventional banks offering Islamic windows and products. Institutional development. International bodies like the Accounting and Auditing Organization for Islamic Financial Institutions, OIFI, and the Islamic Financial Services Board, IFSB, have established global standards. Crisis resilience. Studies suggest Islamic banks weathered the 2008 financial crisis better than conventional counterparts due to asset backing requirements and prohibition of speculative instruments. The growth of Islamic finance demonstrates that interest-free economics isn't merely theoretical but provides viable alternatives that attract both Muslim and non-Muslim participants seeking ethical financial options. Personal and societal applications. The Islamic prohibition of riba carries profound implications for both individual Muslims and broader society. For individual Muslims, avoiding riba represents a daily economic jihad, struggle, that requires vigilance, sacrifice, and sometimes financial creativity. Yet this struggle offers spiritual benefits by aligning economic behavior with divine guidance. For Muslim communities, building interest-free economic institutions strengthens community self-reliance and circulates wealth more equitably, addressing poverty through structural solutions rather than just charity. For global economic discourse, Islamic perspectives on interest contribute valuable insights to discussions about sustainable and ethical economics, particularly regarding questions of risk-sharing, asset backing, and financial stability. For interfaith dialogue, the prohibition of interest provides common ground for dialogue with other faith traditions that have historically questioned or restricted interest-based lending. The prohibition of riba ultimately invites us to reimagine economic relationships based on partnership rather than exploitation, shared prosperity rather than individualistic gain, and real economic activity rather than financial abstraction. By embracing these principles, Islamic finance offers not just religious compliance but a vision for a more equitable and stable global economy that benefits all of humanity. And there you have it. We hope you found this information helpful and thought-provoking. Our goal is always to provide you with content that both informs and engages. If you enjoyed this video and found value in it, we'd be incredibly grateful if you could take a moment to hit that like button. Your positive feedback helps our content reach more viewers who might benefit from it. Don't forget to ring the notification bell to stay updated on our latest uploads. We release new videos regularly and would love to have you join us on this journey of discovery and learning. Thank you so much for watching. Until next time, take care and stay curious.